Looking for a high dividend yielding company? Look no further than Main Street Capital, a business development company offering over a 7% starting yield, and they pay monthly dividends. Main Street is a business development company, a BDC, that lends out to small and mid-sized companies that typically get overlooked by big banks for loans which they can use to grow their business. Business development companies are required by law to pay out 90% of their net income in dividends, and in exchange for doing this, they don't have to pay any federal income taxes. It's one of the few times that Congress isn't milking me dry for every last penny I have. Although we often hear about other high-yielding investments like REITs or income ETFs, BDCs are another opportunity to boost that passive income. This is a chance to get exposure to private equity, which is an investment in which investors purchase shares in privately held businesses. The main ways that Main makes money include interest income, which is the interest it collects on the loans that it gives out to companies, just like a bank. It also collects dividends on its equity investments, and this is a chance to get dividends from privately held companies. Main can also make money selling equity investments for a profit. They also collect a small amount of money from fees, such as their loan origination fees. They also have management fees, and they also have consulting fees for some of the services that they provide to the companies that they invest in. Main focuses on investing in companies that typically generate revenues in the 10 million to 150 million ballpark range. Main will invest anywhere between $5 to $75 million on these investments. And when looking at their companies to invest in, they're looking for strong competitive advantages with proven track record results, they're looking for stable cash flows, and they're looking for a really strong management team. Main is a little different than other BDCs in that it really goes after these lower middle market companies, or LMMs, because to them, these offer potentially the best opportunity for realized and unrealized gains that would offset any potential credit losses related to the debt investments that they do, and in the long run, their NAV, their net asset value, should go up as the value of their investments rise. Now, another big difference for Main and other BDCs is that Main is internally managed, where most BDCs are actually externally managed. Like my other favorite BDC, Ares, is managed by Ares Management Corporation. This is beneficial because this is less in management fees Main would have to pay for a third party, and also a lot of the employees that work at Main, their employee compensation is directly tied to the company's performance and individual metrics, so there's a lot of incentive for the employees to look for the best possible deals. Main's management team is industry professionals with over 100 years of collective investment experience, so this isn't a bunch of Wall Street bettors holed up in their mama's basement to invest in meme companies. So they're gonna do all the due diligence for us, they're gonna do all the vetting for us, and we're just gonna sit back and collect those monthly dividend checks. They might not personally go to the moon themselves, but it's possible their companies will. 2% of their $6.4 billion in investments under capital management is towards aerospace and defense, and just look at how well diversified this company is across its industries that it invests in. 194 different companies are under Main's portfolio, and the company's average investment size is just under $20 million. No particular industry is over 10% of their portfolio. So on paper, it might say that we're getting a financial company, but this is really a way to get exposure to so many others like food, hotels, machinery, construction, healthcare, chemicals, and it's also well spread out geographically. A little bit more exposure to the West and South, but still overall pretty diversified in where they do their business in the United States. Now, this diversification, it helps to ensure the company isn't overly exposed to any one industry, which can be a risk for many other investment companies. Alright guys, now for the part you really want to know about, dividends and total returns. Luckily, Main is very impressive in both areas. It has paid out dividends either every quarter or month since its IPO in 2007. This includes during the 2008 financial crisis, when this company was still super young, and during the 2020 pandemic, when many businesses were forced to be closed in the name of health. So not only is this company giving out a strong 7% starting yield, but it also has a really impressive track record of rewarding its shareholders. It's never decreased its monthly dividend rate. Maine occasionally pays out some special dividends, which is why its dividends per year chart may look a little skewed. BDC dividends are typically going to be non-qualified since they're going to be escaping those federal income taxes. Maine's breakout last year was about 90% ordinary dividends, which are going to get taxed at an investor's highest income bracket, and about 10% qualified dividends, and these qualified dividends, those will get that preferential tax treatment. Now, if you thought their dividends were impressive, wait till you see their capital appreciation gains. Since their IPO nearly 16 years ago, Maine has obliterated the market returns, returning 836% with dividends reinvested compared to the market's 232%. That's nearly a 16% return each year versus the market's 8%. Now, just because it has destroyed the market the last 15 years, that doesn't necessarily mean it will continue on that pace for the foreseeable future, but it certainly does look really promising. Maine has a really small market cap of just $3 billion. Now, I don't know many other investments where you can get monthly dividends, a 7% starting yield, and have a track record of destroying the overall market. Now, if you want to look into another 10% starting yield BDC that I own, check out this video that I did on Ares Capital. Want to see my full $120,000 plus portfolio that I was able to reach in my mid-20s? Check out this Patreon link below. I also post all my weekly trades on there. Now, support a small-time YouTuber, hit that like button, leave me a comment. If you guys want to join my Dividend Discord for free, just leave your Discord username in the comments below. My videos are always found in podcast form under the Collect Cash podcast name. And you know the investing motto, buy, stash, and collect cash.